Let's start off by taking a look at the granddaddy of all the currency pairs, the euro versus US dollar. This is the most actively traded currency pair, hence you want to pay attention to the key levels, especially key levels on all our charts, including the daily chart. What's important here is the 100-day moving average was tested and held. The 100-day moving average came in around the 66, 67 level. You can see it right there. The market low came in around 68, 68. So we got within a pip or two of that key moving average, and the market bounced up, closing above this trend line. This old trend line in the hourly chart comes down through this channel here. We had this channel and made a correction and moved sharply down over the last 2 days, putting the bias to the downside. Now the market did break above that channel trend line and now is looking to test the underside of it, 140.32. So as we head into the night session, 140.32.33 is going to be a key level that we're going to be watching on in early session. Let's take a look at the 5-minute chart. The 5-minute chart is showing that the 100 and 200 bar moving average are converging, and the price just came down, tested both those two moving averages. 100 started to move up, 200 started to flatten. This is a change from this move to the downside, this trend move to the downside. Note here how the market held the 100, held the 100, held the 100, broke above the 100, kind of consolidated, moved a little bit above the 200. We're trying to get to our next target level at 72 level, and now is back down. So we're at a point of point here for the euro versus US dollar, at least from a technical perspective. We could consolidate a little bit more here. Why? Because look how far away the 100 and 200 hour moving average are, and typically you get these trend moves and non-trend moves. But we'll be paying attention to this 32 area. I think everyone would agree that's a key technical level, and see if we can develop any momentum after that. Let's take a look at the sterling versus US dollars, our next currency pair to analyze here today. And we have one, two, three, four, now five different levels along this trend line here. 161.02, the low came in at 160.87, so we broke through that trend line. We should have seen the market move lower, shouldn't we have? Shouldn't we have, especially breaking below the 100-day moving average? We didn't. The market broke back above that trend line and is starting the new day above it, 161.05. The low here today was 87. We're going to have to get through the 87 level in order to push this market to the downside. What I want to see is any sort of rally toward the 161.59 level. Find good sellers against that level. After all, it is the first time the market has been and closed below the 100-day moving average since this day right here. This goes all the way back to January 11th. You ask why not this day? Well, it closed above it. So all these other days in between, which account for 1, 2, 3, 4, almost 5 months, is the market closed above that 100-day moving average. So this is a significant close. We're going to see this market continue and gain some momentum to the downside as on this move. Now the problem with this break below the 100-day moving averages over the last 2 days, pretty good damage to the downside here for the sterling versus US dollar. I'm going to get rid of this Fibonacci here. I'm also going to get rid of this line right here, make things a little bit more simple. Take a look at the move to the downside here. The market went from a high of 163.03 down to 160.87. What is that? 220 pips to the downside here, without making really any sort of breather in the move. So it's not unusual that the market may see a correction up to the 161.40 level. That will stay below our 100-day moving average, and we'll be watching that 160.40 level on the top side here tonight. It's currently trading 161.18, so 161.40 is where we're going to look for resistance. Let's take a look at the dollar versus yen. I'm going to go to the 5-minute chart here because the 5-minute chart kind of gave it away here, folks. What were we in? We've been very narrow trading range. Wrote a commentary about how the market was looking for a move away. Why? Because our two moving averages converged, the 100 and 200 bar moving average over this period, which really counts for, let's count it, 1, 2, 3, 4, 5, 6, 7 hours. The market was in a range between 89 and 71, 18 pips. That's not That's not a big enough range, is it? And as a result, what do we see? We see the dollar yen start to move back up to the upside, or start move to the upside. We saw a momentum start to develop in that direction, breaking above this trend line here. moving above the other trend line here, correcting down and moving to, further to the upside. So for those people who are dip buyers against the 100-bar moving average around the 78, you have 20 pips in the trade. Right now we do need to move. There is a potential to move higher. From here, I would be watching this area down below for support. This 100-bar moving average moving up toward the low of this area, so 85 to 89 to 90 is our key support level, and let's see the market stay above those levels. That's your risk, really. The market move below the 100-bar moving average, but what we're seeing the moving average move higher right now. Where can we go? Let's take a look at the hourly chart, and it's undenying that we need to get above this ceiling here at the 82.02 level, and then we have room to head up to the highs from last week at 82.23. On the daily chart, taking a look at the high from last week, also corresponds with the 100-day moving average. It comes in at 82.24. Are we in agreement that we have to get above the 82.24 level in order to really get this market moving in this type of direction? Yes, we are. So get above the 100-day moving average, then we get the 200-day moving average, and then we can see the market even move higher off of that level. Here is the intervention. Here is the large correction move. And we're kind of trying to figure out, do we want to go higher here, or is that going to be the extent of it? So everything's in front of us. We know our levels. We are getting indications that the market has some further momentum to the upside as opposed to the downside. We saw the market consolidate here and can anticipate a trend type move. Let's see if it actually works out. The dollar versus Swiss franc. Did some commentary in the midday commentary in regard to this currency pair and the euro Swiss. I'm going to do the same analysis here. Take a look at the same two combinations. Why? Because I can't help but look at the dollar Swiss and its trend to the downside, and see that this corrective move of this little leg came up 50%. It just doesn't add up that that's all that can happen. Nevertheless, we have to respect certain levels, and one of the levels is 38.2% retracement. And certainly we can't get bullish unless the price moves above the 38.2% retracement of this move to the downside. I know we did already here. That was the first leg with the correction to the 50% retracement, correction down. Now we have to see the market move above the 88.52 level. If we can't get above that level, all bets are off in the dollar versus Swiss. Let's take a look at the hourly chart. Good indication for the market is this. We bounced off the 100-hour moving average here. In between our goalposts, we have the trend line here and the 200-hour moving average, which we're testing right at the moment at the 37 level. Get above that 37 level, get above the 53 level, and it opens the door for further upside momentum in the dollar versus Swiss. It's going to need some help, however, by a move higher in the euro Swiss, in my opinion at least. Why? Because the euro Swiss reached record low levels here today. Record low levels. It took the price below the 124 level. This is 124.06. Key support at 124 to 124.06. As you can see here, the market is a touch above that level, currently trading, I don't know, around 18 or so, maybe 10 to 18. So we're going to have to see this market develop some momentum, folks. Get some movements to the upside, and that will help the dollar versus Swiss in the meantime. As you can see, this trend move to the downside, turn into a non-trend, turning into an upward at least bias here, but we're running short of 38.2. We're at the 12 low. We need to get above the 45 level to get start making some noise to the upside. Let's watch our 100 and 200 bar moving average in that 124 level. It's pretty easy to see in the euro Swiss as well. The Aussie versus US dollars, we head into their session, came off today it fell below the 38.2% retracement, and currently still below the 38.2% retracement. That level comes in at 105.11, and staying below that 105.11 is going to be what we're going to be looking for that currency pair. We did have a sharp move to the upside. It came right up to our old floor level. This is a floor, and then the floor became a ceiling. The ceiling held the upside, and the move back to the downside suggests that, and the move below that 11 level, maybe some further pressure. We're going to be watching 11.11 real closely in the nighttime session, and we'll be watching this 105.33 level in the Aussie versus US dollar. As far as economic releases of the next 24 hours, we have German IFI business climate 113.9 versus 114.2. That comes out at 4 a.m. German final GDP comes out actually at 3 a.m. 1.5% versus 1.5. This is for quarter one, so it's old news. Nevertheless, the market's going to be paying attention to that. Industrial new orders in the Eurozone minus 1.2 versus plus 0.9. CBI realized sales for the UK 11 versus 21 down sharply. MPC member Fisher speaks. This is Monetary Policy Committee of the Bank of England, 7 a.m. He's going to be speaking. And FOMC member Duke speaks at 8:25. We have the FOMC member Plosser speaking at 9:50. And new home sales in the U.S. Along with the Richmond Fed manufacturing come out at 10 a.m. 305 is the annualized sales pace for new home sales versus 300,000. That number has been depressed. Why? Because there's a lot of existing home sales. Existing home sales are not scheduled to be released until the following week. Also, Richmond Fed manufacturing index expected to come out at 10 versus 10. So those are the key economic releases over the next 24 hours. Talk to you later. Take care. Have a good fortune with your trading. This is Greg McCloskey for FXDD. Remember to sign up for those webinars. My webinar takes place at 4 p.m. That's around this time tomorrow. So be sure to sign up. Talk to you later. Bye-bye now.